If you want to know why you should start using MetaTrader5 automated trading strategies and not do manual trading anymore, stay tuned. Welcome to another video. In this one, we're going to go over all the pros and cons of manual and automated trading, and we're going to decide what is the best approach for you and why for a lot of people automated trading is the right way to go. If you want to check out all the trading tools we make at tradersmarket.io, there's going to be a link in the description, as well as the link to the masterclass, a completely free masterclass that we have. So let's dive into this. After 5 years of developing trading bots for other clients, hedge funds, small and medium-sized hedge funds, and trading manually myself, there is still no easy answer on what is the best thing to do for everyone. But here we're going to go over some of the pros and cons and why I lean to automated trading almost always. So first, what does manual trading mean at all? So manual trading means that you're calculating risk, stop loss, and take profit by yourself. This means that you're entering right here, you set your stop loss 20 pips below, TP 50 pips above, and then you take all of these prices and then you input them into your MetaTrader and you basically open the trades. Also, all of these SLs and TPs need to be calculated depending on your risk to reward or ATR or whatever you're using. Then what you do is you need to open those trades, and most importantly, you need to manage those trades. So let's say you're doing some trailing stop loss technique, or you're taking your positions out at some time. You need to all of that managing needs to be done by you. So at the end, what you're basically doing is not really looking at the screens 24/5, but at least the number of hours of your target session. So if you have London session in your mind or New York session that you're trading, you need to be there in the screen at the screens almost all the time. So one issue that you can definitely see if you are trading manually is that it is exhausting. So if you are doing it right, then it will be exhausting. It means you need to manage all the trades, open all the trades, and really be in front of the screens for hours and hours. So the successful manual traders that I know really do spend a lot of time in front of the screens, and it becomes exhausting. So another thing with manual trading is that backtesting is exhausting too. So how does backtesting work in case you're trading manually? If you're trading manually, that means that you're also doing manual backtests, which means you take this replay and then you put it to a specific candle, or if you're using some other tool, anyways, you just try to replay the history. So you start from here and then you start looking at candle by candle, you start opening long trades and short trades, and hopefully you have some Excel sheet where you put, okay, this is +1R, this is +2R, -2R, etc., etc. And then you go through all of this history yourself and you're finished. This can take hours and hours to finish from my experience. And one issue with this is that you just checked only one parameter set. You just checked one strategy. What do I mean by that? So let's say your strategy is some simple EMA crossover. So this means that you have a slow EMA period, which can be changed. Then you have the fast EMA period, which can also be changed. Let's say these defaults are 50 and for the slow, and you're using 200 EMA for the 50 for the fast and 200 for the slow. This is the most popular combination, I would say. Then let's say you have the trailing stop loss, which you are sometimes using, sometimes not, and then you are waiting for some price action confirmation like engulfings and pin bars. But you want to check, should you wait for engulfings or pin bars or any of them or none of them? Should you use trailing stop or not? Should you use slow period EMA of 200 or 100 or 300? So there's so many combinations that you should be able to test out and that you should be able to experiment with in order to see what is really making profits in the market. So the issue with this is that every single backtest that you do takes 5 hours, for example, or 3 hours, doesn't matter. Here you can easily get up to, hundreds of combinations, like maybe not with these parameters only, but if you add even more, you're gonna get up to hundreds and thousands of different combinations. So this becomes impossible. So what you do is you mostly just stick to one combination that you heard on YouTube or somewhere else, and this is not going to be the most perfect way to trade. You're always going to be using what other people told you. You're never going to experiment yourself, and this is most important in order for you to believe in your own strategy. Now, one thing that I do believe manual trading can win at is adaptability. And what do I mean by this? So let's say you are trading a market that is changing its rhythm very much. What does this mean? It's going from a ranging to a trending market and just changing the rhythm at which it moves, the volatility, etc., etc. So if you're looking at the screens all the time and because of your trading manually, then you're probably gonna encounter this sooner. You're just gonna see it sooner. So you may say, okay, now I need to change up my strategy a little bit. On the other hand, if you're optimizing your bots and then leaving them to run, for example, 1 month, then you're gonna come 1 month later and then you're gonna see, okay, my bot is not performing very well. This means that the dynamic changed. So manual trading can be a bit faster with this, but again, if you're taking a look at the screens frequently enough, I do believe that you can achieve the same with automated trading also. So what does it mean to go the automated way? Automated way means that you're using EAs or expert advisors, and this is just MetaTrader's way of saying trading bots. These are just scripts, so these are programs of trading strategies. So what they need? First, they need a set of rules, and this is one very important thing, and basically one of the biggest pros of trading bots is that you need to define your strategy very, very clearly, because all the trading bots need to be rule-based. So let's say you're trading the EMA crossover strategy. So you have, 2 EMAs, and what you tell it is that, okay, if the EMA, the fast EMA goes above the slow EMA and before it was below, then it means we have a buy trigger. Then if you say, okay, I wanna have the engulfing price action confirmation, I wanna wait for the engulfing candle, then you need to answer, should the engulfing come after the crossover or before the crossover? And if it comes after, can it come 2 candles after, 3? But if it comes 5 candles after, for example, right here, is the signal invalidated? So these are all the questions that you will be asked, okay? So if you want to automate your trading strategy. So when you get very detailed, then you're able to automate strategy. We've automated hundreds of strategies, and in each one of them, you need to be very, very specific about what are the rules you're using, and when you define them, then you can successfully use the strategy. So one more thing is that a good trading bot is fully customizable. What do I mean by this? Our trading bots use ATRs for stop losses, which is one of the best ways to make sure you are following the volatility of the market. Also, you can change the period of the ATR. You can even change how many times you multiply the ATR in order to make the stop loss. So maybe you want 2 times the ATR, 3, 4, 5 times the ATR, or whatever. We have the risk to reward ratios, which are customizable, daily profit and loss limits. These are for prop firm challenges, trailing stop losses, which you can turn on and off, etc. So a good automated trading bot should be fully customizable. So now that you have the trading bot, what is actually the pro of automated trading? And there are 3 things. One is execution. It can execute in milliseconds. This is always going to be faster than you doing it by hand. Second is consistency. We just talked about the rules. So when you define them, it's going to follow them to the pip perfectly, because it's a program. It doesn't have emotions. It doesn't think like a human. It will just follow the script, look at the data. If it matches, it will open the trades. And 3 is scale. And when I say scale, I mean both execution and backtesting. Execution, like you can put one trading bot on 10 pairs and it can open 10 trades on 10 different pairs in milliseconds. You cannot do that by hand ever. And the second thing is backtesting. So backtesting is, in my opinion, one of the most important parts of trading, because you need to experiment, you need to know your strategies. So with trading bots, you can actually backtest in minutes. You can backtest like years of data in minutes. So what does that mean is that it's gonna amplify your mistakes, but it's gonna amplify your edge too. So you're gonna make mistakes sooner, you're gonna learn from them, and then you're gonna make your edge. So after this, we're gonna go into MetaTrader 5 strategy tester so I can show you one specific thing that I experimented with that was only possible because I was using trading bots. It's something regarding trailing stop loss. So stay tuned till the end, then we're gonna go over that. At the end, what is actually the best way for you to trade? So you're gonna stay manual in the following scenarios. If you're trading news, you probably have some very specific strategy, or you're just doing it, based on the feeling that you have. So this is something that's gonna stay to be manual trading most of the time. Second, discretionary entries and strategies. If you're trading some smart money concepts, something super complex, this is generally hard to be fully implemented in a trading bot. So these people mostly stay manual. And three is the shifting regimes. As I said, manual trading is good with adaptability. So if you're trading a market that is constantly changing, evolving, has bigger than smaller volatility, is trending very much and then ranging a lot, then a manual trading can maybe be better, but yeah. Then when you should go automated, rule-based strategies. If you have a rule-based strategy, meaning you're doing indicator-based strategy or price action-based, then the chances are it has been automated by someone. So you can find a lot of strategies on the internet, on MQL5 marketplace, or you can take ours, which are fully customizable exactly for the people who are like, okay, I want to be able to trade multiple strategies. I want to be able to trade multiple confirmations. So I want to customize it, but I don't want to go and pay someone thousands of dollars to make exact one strategy that I want. So with our bundle, you have, tens of strategies, which are from EMA crossovers, RSIs, RSI divergences, to some grid and New York, London breakout strategies. All are fully customizable with price action confirmations and all the stuff that you can change according to your rules. So if you have a rule-based strategy, look up online. There are chances that it is automated. It doesn't have to be our trading bots. Anyone, like MQL5 marketplace is full of good trading bots. Second, if you want to have a proven quantified edge, what do I mean by this? If you backtest, you are gonna have a much greater confidence in your strategy than if you would be using your strategy trading manually, trading a couple of trades every week. Until you come to 1,000 trades, it's going to take years maybe. On the other side, you can come to 1,000 trades with automated trading in your backtests in minutes. So if you want to be sure that your edge is proven over a great amount of trades, then you should use automated trading. And three is high frequency execution. The execution is always going to be better with automated trading strategies than as opposed to manual trading strategies. At the end, the question is, if I could pick just one, which one would I pick? It's going to be automated, definitely. Also, if you're a beginner, I would say automated trading is the right way to go just because of how much backtesting you can do. I do believe my philosophy is that you should make mistakes faster, you should experiment, you should be very methodical about it. So if you make more mistakes doing back testings, you're gonna learn more and you're gonna come to the right parameter set and a valid trading bot that makes money faster. Again, it's some work on you, but at least you're gonna be able to test on much more history and you're gonna be much more confident in your strategy. So now I said, let's go through the example of trailing stop loss. How would I decide, should I be using the trailing stop loss or not? So now we're in MetaTrader5 strategy tester, and right here we took the moving average crossover strategy. We are testing on Euro US dollar, and we're testing 2025 to 2026. So 1 year of data. And we picked fast genetic based algorithm just to optimize different parameters. And the parameters we're optimizing are the trailing stop loss parameters. So first we want to see, should we enable or disable the trailing stop? And then we are giving it different values for the distance when we start trailing, and then how much do we trail for? So what is the difference between the price and the stop loss that will be? So now if we go to the optimized results, we can, sort by profit, and these are all the best results right here, okay? So one important thing that you can see on the right is that enable trailing stop is true all the time. So this is a great example to just see that in all of the best variants of all of the best results, all of the best backtests, which made the most money, okay, so maybe not this one, but all of these that made money, the enable trailing stop is equal to true. And this is important. So this is how I can experiment and I can see, okay, should I use the trailing stop at all or not? So when I see that it is true all the time, this means that, okay, it is making money. If I see right here, when it was false, it was losing money. So this is a clear answer to whether you should be trading with trailing stop this trading bot on Euro US dollar. Again, we need to be very specific. Then you can do the same for all of the other parameters. So you can basically take a look, okay, what are the values that are repeating the most? So these values are generally gonna be good. So there's gonna be a completely different video about backtesting, because this is one of the most important things in trading with trading bots. And it is, we're gonna make a completely separate video about the strategy tester and about how I backtest my trading bots and how I decide which parameter values are good. But this was just an example to let me explain how I backtested, 1 year worth of data, and there were like 98 combinations that we backtested in like a couple of minutes. So that will be it for this video. If you want to check out our free MT5 automation masterclass, there's going to be a link below, and it's completely free, so you should check it out if you want to learn more about MT5, EAs, generally automation on MetaTrader. Also, if you want to check out all the trading tools, the bots that we develop at tradersmarket.io, there's going to be a link below. Thank you so much for watching, and see you in the next video.